The April numbers just dropped for Henderson, and they are telling a story worth paying attention to. The median home price dipped, sales volume slowed, inventory climbed to levels we haven't seen in this market in years, and over in Lake Las Vegas, prices are down from where they were this time last year. And the market is showing some real movement that move-up buyers need to understand. So the question everyone is asking right now is this the beginning of something bad? Or is this actually the window that move-up buyers in Henderson have been waiting for? By the time you finish this video, you're going to know exactly how to read these numbers, not the headline version, the real version. All right, look, what kind of realtor would I be if I didn't bring you the real numbers? Whether you're actively buying, actively selling, or just sitting in your home in Henderson wondering what it's worth right now, this information is for you. Knowing your market isn't just for people in transaction mode, it's how you make smart decisions about your largest asset. That's what I do.
I'm Chruszhet Hydron. I've lived in Las Vegas for over 40 years. Welcome to my channel, where local insight meets real guidance.
I'm Chruszhet, and this is your Henderson and Lake Las Vegas market update for May 2026. So everything I'm covering today is based on April 2026 closed sales data, real numbers, what actually happened on the ground last month, closings, prices, supply and demand, not projections, not guesses. Here's what we're covering today. I'll start with Henderson headline numbers and give you the full context behind them. Then we'll look at what's actually selling quickly versus what's sitting. Then I'll break down the luxury market because that segment is behaving differently from everything else. Then we zoom all the way into Lake Las Vegas for a specific breakdown because those numbers deserve their own conversation. Then I'll cover the builder incentives that are still on the table this month, and I'll close with what all of this means if you're a move-up buyer sitting on equity right now. So let's get into it. Okay, Henderson by the numbers. So the median sales price of previously owned single-family homes in April came in at $473,875. That's down from $480,000 in March. That's a drop in $6,125. And when you compare it to the April of last year, April 2025, the median was also $480,000. So year over year, we're down about 1.3%. Now, I want to put that in real context because before anyone starts panicking, April 2024, the median was $469,000. April 2023, it was $430,000, and the market hits its recent peak in late 2025. So right now we're sitting within a reasonable range of that peak. That is not a market in free fall. That is a market that ran very hot and is now finding a more sustainable level. Sales volume is where things get more interesting. We had 2,110 single-family home closings in April. That's down 7.8% from March and down 2.9% from April of last year. For context, in April 2022, we had over 3,000 closings. In April 2021, we had over 3,500. The pandemic era was an outlier, we all know that, but the slower pace of sales is real, and it does matter. Now, on the supply side, this is where buyers are gaining ground. We had 3,588 new listings come onto the market in April. That's up 6.6% from March, and the number of homes sitting on the market without an offer is about 6,689 active listings without offers. That's up 3.6% from last month and up 7.7% from this time last year. Months of supply came in at 3.2 months. That's up 2.8 in March, up from 2.98 from a year ago. And compared to April 2024, when we were at 1.5 months of supply, we literally have more than doubled available inventory over 2 years. Here's what that means in plain language. Buyers have choices now, real choices. That is a meaningful change from where this market was in 2023 and in 2024. Under 3 months of supply is traditionally a seller's market, and it's 3 to 6 months is balance. So over 6 is a buyer's market, and we're sitting right at 3.2, which means we've crossed into that neutral zone for the first time in years. So what's moving and what's sitting? Let me give you one more number that tells you the real story of buyer behavior right now. 56.8% of April closings were homes that had been on the market for 30 days or less. That sounds okay until you compare it to 60.3% in April of last year. That shift means more homes are taking longer to sell. But here's what I want you to really be clear about, because when I'm out in the field every week, whether it's in Las Vegas or Henderson, and what I'm seeing doesn't fully really show up in the aggregate data. Buyers right now are looking for one of two things. It's either a deal or a diamond. If a buyer is comparing two homes in the same neighborhood, similar square footage, similar bedroom count, similar price, they are picking the one with more bells and whistles every single time. The upgraded kitchen, the custom backyard, the finishes that make you walk in and feel something. If your home is the same price, but the neighbor's home has more to offer, your home is going to sit. But on the flip side though, if a buyer finds something they believe is genuinely underpriced for what it is, they hop on it fast. I'll give you a real example. I have a listing right now that received 13 offers. 13. Not because the market is on fire across the board, but because that home was a deal. Buyers recognize the value immediately and they acted. That is really happening right now. The homes that are priced right, the ones where buyers feel like they're getting something, those are not sitting. Those are generating competition still. So the homes that are sitting are the ones caught in the middle, not the deal and not the diamond. It's the average condition at a price that assumes otherwise. And I'll add one more thing I'm seeing that doesn't show up in any of these reports. Some of the buyers I'm working with are not in a hurry. They are comfortable. They are watching the market. Some of the relocators I'm talking to are looking a year or two out. They're doing research now, building relationships with the local agent they trust so that when they're ready to pull the trigger, they already know the market. That patience is real and it's part of why inventory is climbing because those buyers aren't transacting yet. For sellers, the message is simple. If your home is not a deal and it's not a diamond, you need to decide which one you want to be. Price it like a deal or invest in making it a diamond. There's no profitable middle ground right now in Henderson. And the other shift you need to know about. Buyers are asking for things that just weren't possible 2 years ago. Rate buy downs, closing cost credits. They're doing inspections and actually negotiating the results. That is the new normal in Henderson right now. If you're a seller, that's the reality. But if you're a buyer, that's your leverage. Now the luxury segment. Homes over $1 million are behaving differently, and I want to spend a minute here. 157 luxury homes closed in April. That's down from 193 in March. So transaction volume dipped, but here's what's interesting. Despite fewer sales, the median luxury price actually went up. $1.425 million was the April median, up from $1.4 million in March. A $25,000 increase, and that's fewer transactions but higher prices. That tells you the inventory at the top of the market is tight. When supply is constrained and motivated buyers are still transacting, prices hold or rise. A big driver of this is a continued relocation wave from California and Washington. Nevada has no state income tax. That is one of the most significant financial advantages of relocating here. And for a high earner from California or Washington, the difference in what they keep every year is substantial. When you layer that onto the purchasing power difference, a $3 million home in Henderson buys you something that would cost $6 to $7 million in the Bay Area. The math becomes very clear for a certain type of buyer. The communities absorbing this type of demand are the ones with elevation and views. McDonald Highlands, Iskaya, Roma Hills. These are neighborhoods that are carved into the hillside, and you cannot manufacture more hillside with strip views. That structural scarcity is what puts a floor under prices up there even when the broader market softens. In the $2 million and above tier, we're also seeing more cash transactions. These are equity-rich buyers who sold in expensive West Coast markets and are moving that capital directly into the Henderson luxury. They don't need to finance. They don't care about what the rate environment is. That's a buyer pool that doesn't shrink when mortgage rates tick up. Okay, before I get into the data on Lake Las Vegas, I want to point you to something. If you haven't seen my last video on Lake Las Vegas, I did a full breakdown on how this community has completely leveled up. The lifestyle, the amenities, what's changed out here, and why people are choosing it. That video gives you the full picture. I'll link it right here. Go watch that one after this, because what I'm about to show you with the numbers makes a lot more sense once you understand what you're actually buying into out here. All right, so this is a segment I want you to pay close attention to. The median home price in Lake Las Vegas is sitting at the low 600,000s. And depending on which data set and which month you're looking at, prices are down somewhere in the high single digits to around 10% from this time last year. I'm going to tell you what that means and what it doesn't mean. So Lake Las Vegas is not a distressed market. This is a lifestyle community. The people who buy here are making a very very intentional choice. We've got the lake, the resort, the amenities, the golf, the walkability, the pace of life. This is not a neighborhood someone just stumbles into. It is a destination address. So a 10.9% price dip doesn't tell the same story here as it might in a standard subdivision. What it likely reflects is a mix of who's bringing inventory to market, what price points are active, and a segment of sellers who are motivated and willing to meet the current market. Here's a number that gives me more confidence than price. Homes in Lake Las Vegas are taking roughly 3 to 4 months to sell on average, and that number has been improving compared to where we were last year. Homes are moving faster even as prices have moderated. Faster sales plus lower prices points to one thing: motivated sellers meeting a market that is real, not distress. It's functioning. And there's also new construction here right now. Blue Heron has waterfront product. The Bluffs is an active development. Here's my take for the move-up buyer who has been watching Lake Las Vegas. The resort lifestyle this community offers is not getting cheaper to replicate. The lake is a fixed asset. The Westin is here. The community infrastructure is mature, and the relocation buyer from California is increasingly discovering this pocket as an alternative to the hillside communities because it offers something different, something more experiential. So if prices are down nearly 11% and homes are moving faster, that window is getting narrower. You don't want to be the person who watched this and waited for a bottom that had already passed. Okay, before I close that, I need to flag something specifically for buyers, especially anyone considering new construction in Henderson. Builders are competing for your business right now in a way they haven't had to in years, and they have a tool that resale sellers simply don't have. They can permanently buy your interest rate down. Here's what's been on the table this month, and I want you to verify these directly before you act on any of them because builders often move fast and things change so often. Okay, so Taylor Morrison has been offering a 30-year fixed rate at 4.99% or a 7-year ARM starting at 3.75% on select communities through May and into June. Toll Brothers has had a 2-to-1 buy down running on select quick move-in homes. That's 3.99% in year 1. Then it's stepping up through a fixed rate from year 3 and forward. Century Communities has had a lock in your yes event with rates starting at under 4% on certain ARM products plus closing cost contributions. The point isn't the specific numbers. Those will shift. They will always change. The point is that builders have tools right now that resale sellers simply don't. They can permanently buy your rate down. And on a $600,000 purchase, that difference between today's market rate and what a builder can offer you can be several $100s a month. If you are considering new construction in Henderson, this is a conversation to have right now while those incentives are still live. That is real money, and on a $600,000 purchase, that rate difference can be hundreds of dollars every single month. That's not a rounding error. That's the conversation worth having before those incentives expire. So let me bring this all together. Henderson is not crashing. It is recalibrating. After years of a runaway seller's market, we are returning to something that actually functions, where buyers have options, where pricing matters, where sellers have to earn the sale. If you're a homeowner in Henderson who's been sitting on equity from the last few years, you're not in trouble. You are at a decision point. The equity is still there. The question is, what do you want to do with it? The gap between what you can sell your current home for and what you can move up into still exists. And in some corners of this market, particularly Lake Las Vegas, it may be more favorable right now than it's been in the last 3 years. All right, I'm Chruszhet, and this is The Work. If you're watching this and you're thinking about your next move, reach out. Let's look at your actual equity position, your actual options, and what your real numbers say about your specific situation. Not the hypotheticals, just real math. Subscribe if this kind of straight talk market content is useful to you. I drop a new video every week, and next week I'm going into a topic that I've been hearing about from a lot of move-up buyers lately, the golden handcuff effect. You've got a 3% mortgage rate on your current home and you feel stuck. I'm going to break down the actual math of whether it makes sense to stay put or make the move. You don't want to miss that one. Thanks for watching. I'll see you on the next video. Bye for now.